Homeowners mortgage protection insurance is a trap. Hi, my name is Sunny.
And I'm Alex.
We are the founder of Bright Horizon Wealth. Don't forget to leave a like on our video and subscribe to our YouTube channel to get a video every Tuesday and Thursday. So today's topic is how mortgage protection insurance can be a trap. People ask me if I'm against buying a homeowner's mortgage protection insurance, and the simple answer is no. So why am I calling it a trap? Because it's a financial mistake. I'm not asking someone not to buy mortgage protection insurance when they own a home and have taken out a loan for their house. Because it's an important and a responsible decision. I just don't like term life insurance. Why? Because you want a policy to grow, not to throw. Let me ask you, what if I had told you there is a way that with the same money, you can get more? Would you hold that against me? Yes, the same money that you are spending on buying a mortgage protection can also get you a lot of cash. In other words, instead of getting just one benefit, you can get two simultaneously. Let me tell you a real life story about a family that got burnt with this. My friend and his wife bought a $1 million death benefit on each in the year 2009, paying $300 a month together. They were very happy to get such a good deal, only to discover after 10 years in the year 2019 what a big mistake they have done. All those $36,000 that they had paid in premiums during last 10 years was gone. I repeat, it was gone forever. And they will never see that money again. Ouch, that hurts. Moreover, since they are 10 years older now, in order for them to buy a new policy or change the existing one, it will cost them dearly. They might even find out due to their health problem, they are uninsurable now.
Moral of the story, don't be fooled by those who try to sell you a cheap term life insurance and waste your hard-earned money. As a prudent money manager, you need to look at every dollar that you spend and how and what it yields for you. It does not matter how much money you put in your financial bucket if it has a leak in it. And any mistakes that we make will create another leak in our financial bucket, which is why I call them traps. We need to think about a second option with questions like this. What if at a certain stage I could not pay my premiums for a while? Is there any alternative except to lose it altogether? As we all know, that term life insurance is one-way traffic. The moment you stop paying the monthly premiums, you lose that insurance only to start it all over again. All I'm saying is before you buy, you need to understand what you're buying for and at what cost. You need to ask yourself a series of questions like, will I have access to this money down the road if I ever need it? Will it pay me any interest? Can I make use of this money in any other way, shape, or form? Let me explain it to you. The traditional mortgage protection insurance that is out there in the market is through a term life insurance. There are basically two kinds of life insurance, term life or whole life. So what is the characteristic of a term life insurance? Term life insurance is something like renting an apartment. You rent one, live there for so many years, but when you get out of that house, your landlord doesn't owe you anything. In other words, all the money that you paid them during your stay is gone forever. That is the money you'll never see back again. But on the other hand, your whole life insurance policy is like buying your very own house. You secured a loan from the bank, bought the house, and moved into it. After living there for so many years, now you have paid off your loan and own that house free and clear. It's your house. And a whole life policy is just like that. And you can either buy a whole life policy or a term insurance to protect your mortgage. The choice is yours. So, the question is, why do people still buy those term life insurance policies? Here are the two reasons. Number one, because they're cheap. And number two, because they're sold and not bought. Now, going back to our mortgage protection insurance, what if I told you that there is an alternative to these cheap term life insurances, which is a dividend-paying whole life insurance policy? With a whole life insurance policy, you will have some access to your money, which term life insurance does not provide. Your whole life insurance gives you a guaranteed compound interest year after year, as long as you maintain the account. As the name suggests, it is for your whole life. In other words, you'll never run out of insurance. Term life insurance stops after a certain age, 5, 10, 20, or 30 years, whatever the case may be. Now, what if I told you that with infinite banking through whole life insurance, not only can you buy a death benefit, but you can also use it as living benefits and making money off of it. You will have access to this money in case you ever need it. Your money will keep on making a guaranteed 4% compound interest every year. Dividend checks every year, year after year. Through this policy, you can be your own banker and get rid of all your debts. It is 2-in-1. You get both insurance and investment here. Depending on the amount, you can also get a supplemental retirement check from here. If you want to learn more about it, click the button below for our free on-demand masterclass to learn how you can make more money not by working any harder, but working smarter. And don't forget to own your own financial future,
or someone else will.